Hey, good morning, guys. How are you? Money Smart here. It's getting cold right now. Okay, for today we're gonna talk about credit card. Is it good or bad? I mean, everyone got the credit card, right? Me, when I was young, when I first get my credit card, I was so excited because what? I can buy whatever I want without saving yet, and then I'll just pay it later, right? So, do you think it's gonna be a bad or a good thing for us? So, let's talk about it, right? Before everything, can you please smash the like button because it's gonna help me a lot. And one more thing, disclaimer is just I'm not a financial advisor, I'm not a registered financial advisor. So, whatever I'm sharing right now is based on my experience and my readings that I apply on my life that you can do on your soul if you want to. Okay, let's go. Let's start. So credit cards. So there's some disadvantages and advantages when it comes to credit card, right? So first of all, we're gonna talk about the disadvantages. What are those disadvantages that we can talk about? First one. Forgive me if I'm keep on looking at my credit, my computer because this where my my PowerPoint is here. Okay. So what are the credit card disadvantages? First of all, annual interest rate, which is 19% or higher, which is very high when you purchase a big amount of money. Next is an annual fee. Of course, if you own a credit card, some of them will recharge you annual fee, right? Just to maintain the card. And then another one is it can hurt your credit score, right? And then the last one is it can encourage you to do impulsive buying. So okay, let's start with annual interest rate, 19.99 or higher. So most of the credit cards anywhere in the world, here in Canada, here in the Philippines, back in the US, some of them, or not most of them, will charge you 19.99% interest when you don't pay like on time. So it's like if you buy an $800 worth of goods or things, you're gonna multiply it 19.99% and that's gonna be your interest rate, which is really high, right? Some of them, right, 19.99%, but you can see some of the credit cards here, like here in Canada, they might also charge you more than 19.99% of interest rate. Sometimes you can see like a 24.99 interest rate, which is really big, right? But if you don't pay it on time, but if you pay it on time, they won't charge that one. So that's the thing. That's one of the disadvantages. The next one disadvantages is the annual fee. So all of the credit cards or some of them, they charge no annual fee. I know for some, I got a credit card that doesn't charge an annual fee, right? Because most of the customers are looking for a credit card which doesn't charge them an annual fee because it's already an extra expense for them to maintain that card, right? So most of the banks are like trying to do it on a credit card without an annual fee, right? So, but some of them will charge you back after a year. They will charge you back with an annual fee. For example, when I was living in the Philippines, I got a credit card with HSBC and HSBC, which charged me about 2,500 pesos yearly, which is like equivalent to about probably $30, $40 or $50 at max, depending on the exchange rate every year. So 2,500 pesos is like a really big money to get expense with a credit card, right? But probably some of them, or back in the Philippines, they have some credit cards that doesn't charge annual fee. Here in Canada, there's a lot of credit cards you can look for that doesn't charge an annual fee, right? Then the next disadvantages of the credit card is it can hurt your credit score. So what do you mean it can hurt your credit score? Especially back here in Canada and in the US, credit score is your life when it comes to financial world, especially if you want to buy a house or get a better rate of loan or everything. So you have to maintain your your credit score, right? I mean, if you use a credit card and then you don't use it properly, it's gonna hurt your credit score a lot. For one thing is if you don't pay on time and then you miss a payment of that certain amount of money, and then it's not gonna just accrue an interest rate. It's gonna affect your credit score also, right? Because it's gonna look on you that you don't pay your responsibility on time, and then the credit bureau will look at that. We're gonna look at it, and then they're gonna base that miss payment, and then it's gonna reflect in your credit score, which is bad for you if you wanna buy a house or get a loan for your business or something, right? Because the higher the credit score you have, the better chances getting approved when you want to buy a house or getting a loan or something for yourself. That's why you have to maintain your credit score, which is connected to your credit card. If you miss something or you didn't pay your responsibility or your due payment on your credit card, it will affect your credit score. The next one will be, it's gonna encourage you impulsive buying. Trust me, every card owner will have an urge to buy something if they have a credit card, especially those big item or big ticketed item or price things, right? Myself, I admit I'm always like that. Not really always, sometimes, because of course if you got a credit card, what do you have to say, right? You can just pay with your credit card and then pay it on time. But what's gonna happen is you're gonna buy that big price item, and then you're gonna pay with your credit card, and then you're not certain if you can pay it the next month if that due comes in, right? If the due comes in, I mean, it's gonna stack up if you don't pay that on time, which will affect your credit score, as I said, and then it will stack up the interest. So the item that you bought, which for example worth about $200, if you don't pay it on time every month, which you're supposed to do, it's gonna accrue a lot of interest every month, and then it's gonna stack up, and then all of a sudden you're gonna see on your credit score, your credit card, not credit score, your credit card statement, that $200 will become like double, $400, which is really bad. You won't be able to pay it, which is gonna end up more expensive than paying it by cash because of the interest, right? That's one of the disadvantages of a credit card. Okay, that's all the disadvantages for now, and then we're gonna jump back to the advantages. So what are those disadvantages of a credit card? Okay, so first is a fraud protection versus a savings card from the Philippines or debit card here in Canada and in the US. Build credit utilization, which is 30%, emergency fund, and convenience. All right, so let's talk about the first one, fraud protection versus debit card. Because most of the debit card, if you're wondering what's a debit card, it's just like, it's a savings card like back in the Philippines that you can use to pay, right? Here in Canada, in the US, it's called debit card. So unlike with a debit card, most of the debit card doesn't have protection. But if you use a credit card, it got a built-in fraud protection. So when you set fraud protection, for example, you buy something from the internet, which is, of course, we know there's a lot of fraud, especially those dodgy sites. If you use your debit card and that one is not legit, it's not legitimate internet, and then you punch in your information from your debit card, it's not only gonna deduct the amount that you're gonna pay for, which is like a scam or something, but it's gonna take your information also based on that debit card, right? But unlike if you use a credit card, they got a fraud protection, right? So when you say fraud protection, when it comes to the credit card, it does have like a firewall or something. If you put in your information, your number, your credit card number on the internet, if it's a scam, it's not gonna charge you straight away that amount. It's gonna protect you also with your information. That's why it's good to have a credit card if you're buying from the internet, which is there's a lot of scam, but I mean mostly some of them there's a scam, but there's a lot of legitimate site already, right? So fraud protection versus none. Of course, I'm gonna go with the fraud protection, right? So I'm just gonna use my credit card to buy something from the internet, which it comes with that protection, right? The next one will be build a credit. I mean, I don't know back in the Philippines, for sure in the Philippines you need a good credit score also to buy a car or buy a house, right? To get a loan. But here, as I've said, here in Canada or in the US, if you live in here, you have to have to build a credit. So you have to have a credit history, especially if you're a migrant here or immigrant here, just like us. When we first came here, when we opened a bank from RBC, the financial or the bank teller, whatever you call them, told us if you're gonna open an account, I'm gonna give you a credit card, which will start to get a credit history, or you can build your credit. Because where does the credit bureau get the history of your credit history, right? One of them is a credit card. So if you came here just new in Canada, of course you need to have a credit card to build your credit history, right? Because I know, for instance, one instance when I tried to buy a car before, I got this fellow Filipino who's buying a car also, but the thing is, he's been here for a while, but he doesn't like to use credit card, so he doesn't have a credit card. And then when he's trying to apply for a loan back in that car dealership, he was not approved. The reason of that is because the car dealership or the financial institution that trying to approve him is telling him that you don't have a enough credit history to get approved for a loan. That's why credit card is it's important also for yourself to build a credit history. It's where the credit bureau will base if you're a responsible adult when it comes to your credit. That's why credit card is also important. The next one is also connected with your credit history, or to build your credit. When you have a credit card, there's a category in the credit bureau what's telling you is a credit utilization, which is 30%. So this is one of the category that builds your credit history. So credit card have there's certain amount of credit limit, right? So if, for example, you got $3,000 credit card limit, so your credit utilization for that $3,000 is 30% of that, or equivalent to $900. So if you max out your credit utilization from the credit card, for example, you borrowed more than 900 of that credit amount, it's gonna greatly affect your credit history also, because the average amount that you can use for your credit card or any loan or line of credit or any loan that's under your name should be 30% only. That's what you call credit utilization. So this is 30%. So this one is like a big part of your credit history or your credit score. If you move past your 30% credit utilization, it's gonna affect your credit score, which will definitely lower your credit score, because it's telling the credit bureau or your credit score that you're not using your money your credit card properly, because you're overusing it like more than 30%, which will reflect under your name to your credit score. That's why when you're getting a card, yeah, it's good to have a big amount of credit limit, right? But you always keep in mind that when you have a credit card, don't overspend your credit card. If if possible, make it only 30% of your credit card. Use only the 30% of your credit limit, not the whole of it, because it's gonna greatly affect your credit score. The next one is emergency fund, of course, from the word itself. Credit card, for myself, for me and my family, my wife also, we agreed, for both of us, my wife and I, that if you got a credit card, it's not a mean of using it for everyday use. If you can, of course, you can use your cash, right? Because it's better. You don't have to worry about paying or anything, right? But if you're building your credit history, of course, you're gonna use your credit card, right? But for us, credit card is one way to get an emergency fund. For example, you got laid off with your work, or if you don't have a work, or something happened, knocks on wood, something happened, and you don't have any money. You got, of course, bills doesn't stop if you stop working, right? So if you got a credit card and you know that you're gonna have a work after a couple of months because you're looking for a work, then you can use your credit card for an emergency fund of anything that you need to pay. But of course, you need to pay that after you gotta work, right? So for us, credit card is kind of emergency fund for us. The next one is convenience. So convenience. So most of the entire store, rather regardless if it's an internet or a pop-up store, a supermarket, a restaurant, credit card is very convenient because most of them, if not all of them, will use credit card, right? So you don't have to carry a big amount of money just to go to this store to buy this one, right? If you have that money, just keep it in the bag, use your credit card first, and then pay it later on. If you have that money, pay it in cash. So it's much better, right? So you don't have to bring a big amount of money to pay for something, right? So it's very convenient to have a credit card. Okay, we're finished with the disadvantages and advantages, right? So this is the fun part. So when you're looking for shopping for a credit card, what are the things, or what are the items, or what the features or things that you can look for a credit card to take advantage of it, right? So first of all, if you can get a credit card with cashback, no annual fee, rewards or points, or zero interest installment. So let's talk about it one by one. The first one is cashback. So here in Canada, there's lots of credit cards are doing this one. If you use this certain credit card, they're gonna give you a cashback, which is just like a discount. For example, I got this credit card. It's called Triangle card. It's giving you triangle money. That's if it's a certain amount of triangle money that you can convert into cash. Not really cash, but you can use it to pay good as cash to a certain registered shop. So if you find, or for sure you can find a credit card that can convert your things that you bought to a cashback. So some of example of this credit card are Costco MasterCard, which gives you 3% cashback for a certain amount of your certain amount of money that you charge to your credit cards. It's 3% plus 2% if you use your credit card to their gas station. Next one is the TD Visa card, which also gives you 3% cashback. And another one is a CIBC Visa Infinite, which also gives you 3% cashback. So some of them always gives you like average 3% cashback. It's like the total amount of items that you bought, and then 3% of that will turn into a cash or a points or something like that, a cash, and go back to your credit card statement. That's what you call cashback. The next one is annual fee, of course. who doesn't like no annual fee, right? I mean, you're already using their card, why do you have to charge an annual fee, right? So here in Canada, there's a lot of cards that already give you no annual fee credit card, because credit card is very important here in Canada. I'm sure back in the US, there's a lot of credit card also that doesn't charge annual fee. Back in the Philippines also, probably they're practicing it also, because I mean, it's good to have no annual fee. It's gonna encourage more people to get that card, right? Which is more business for them. So here in Canada, I'll give you some of the example that doesn't charge annual fee of credit card. First one is Triangle MasterCard, which is under the Canadian Tire before, and then Tangerine MasterCard, BMO Cashback MasterCard. I mean, one more thing, take note. All these cards that I'm giving you is I researched that one, and then you put it here. You can search for some credit card that suits you, right? It's just these credit cards are just as example, so you know there's some cards that out there that charge no annual fee or they gives cash back. The next one is rewards or points. So what are the rewards or points? Just like what I told you before, this Triangle MasterCard, they're giving rewards or points. If you buy something from a certain shop, for example, Canadian Tire, if you buy a $200 worth of appliances or something like that, they're gonna give you back a rewards or a points, which you can still later on, if you got enough rewards or point, you can convert it, and that reward or point you can use it to buy another ticket, another item, which is for me, rewards or point is just like good or cash, but in a certain registered shop, it's under to that credit card. So what are those some of the credit card that gives rewards or points? The first one, of course, Triangle MasterCard again, PC Financial World Elite, and then Scotia Momentum. So Scotia Momentum, I know it gives rewards or point for movies or something like that. And then Triangle, of course, Triangle MasterCard, they give rewards or points, especially if you use their credit card to pay your bills and everything. They give you a large rewards or points back to your account. And then the next one is 0% interest. 0% interest, most of the card does this, but there's a certain allotted time only for 0% interest. Mostly it's 6 months to 1 year, or probably 24 months. So you can take advantage of that one if you got a big purchase item, and then you see, for example, this Triangle MasterCard, they got always a promo for all those members that if you buy $150 worth of item, you can finance it for 24 months. So that's a long time, right? For $150 for 24 months. So that's some of the things that you need to look for if you're buying, especially if you're big price item, right? Those 0% installment. For myself, for example, I applied for a Home Depot card. It's not actually it's a credit card, but it's a credit card only exclusive for Home Depot only. So like 3 years back, I planned on buying a barbecue. Of course, I don't have enough money because it's $1,000. So I saw this ad that they can give you a credit if you use it in store. They can make it a 24-month installment, which is good for me because it's 0%. So that $1,000 will be divided to 24 months, and it's like cheap and everything. It's like less than $50 to start with. That's why I got that one. So if you can get, of course, if you can look at your credit card and they charge it 0% installment, then it's better off for you, right? Hey guys, that's all for today. Thank you very much for listening. Just a word of advice. I mean, credit card is not good nor bad. It's all depends on the people who uses it. So make sure if you got a credit card, just be disciplined, be responsible on using it so it won't affect you later on back in your life. Alright, thank you very much. Please hit the thumbs up. It's gonna help me a lot because of the YouTube algorithm, so it's gonna be shown more often to the YouTube website. And please, if you can, like and subscribe onto my channel. Thank you very much. See you then. Bye.